Oh no! Employees want to trade and the trading window is closed again! Do you feel like your trading windows are too restrictive? In this video, I'm going to help you answer that question with data from the 2022 Equity Administration Survey, which is co-sponsored by the NASPP and Deloitte Tax. It should come as no surprise that employees who are most often subject to trading windows are your named executive officers, other senior management, and of course, employees who have access to material non-public information. We see more variation in practice when it comes to lower ranking employees. Here, the size of the company matters. Smaller and mid-sized companies are a lot more likely to make lower ranking employees subject to their trading windows, which makes sense. Employees in smaller companies likely have more financial information about the company, and their contributions and their department's contributions probably have a bigger impact on the company's bottom line. We see a similar trend for outside directors. It's not as dramatic, but here again, smaller and mid-sized companies are a little bit more likely to subject their outside directors to their trading windows. Close to 90% of companies close their trading window before the close of their fiscal quarter. How far before? Well, that depends. Could be anywhere from 11 days to all the way up to more than 25 days before the close of the fiscal quarter. When it comes to reopening the window, most companies are pretty quick to do that after earnings are announced. Close to 80% of companies open their trading window within 2 days after their earnings release. Open market sales are universally prohibited during closed trading windows. That also goes for sales that are done in connection with option exercises. But there are other transactions where practices aren't as universal. Here are some of the transactions that we get asked about at the NASPP and the percentage of companies that prohibit those transactions during their closed trading windows. Gifts are prohibited during closed windows by 44% of companies, and cash exercises, so exercises that don't involve a sale of stock, are prohibited by a similar percentage of companies. That means that a little bit under 60% of companies allow these transactions during closed trading windows. Share withholding for RSUs is prohibited by 35% of companies during their closed trading windows. And for companies that allow employees to make changes to their ESPP contribution rates, most allow that even during a closed trading window. So hopefully now you have a better idea of how your company's trading windows compare to other companies. Again, all the data that I presented was from the Equity Administration Survey, which is co-sponsored by the NASPP and Deloitte Tax. We'll include a link to the survey as well as our webcast highlighting other results from the survey in our show notes. I hope you enjoyed my video. If you did, please subscribe to the NASPP's YouTube channel. That really helps us out, and you're notified when we post new videos. Win-win. Thanks for watching.